Okay, Bismillahirrahmanirrahim. Let's continue. So if you see your master budget, we start off with our sales, then it goes into production. So we already see the sales budget, the preparation of sales budget, and then we already move on into the preparation of our production budget. Okay, next we move into the elements of cost. That will be your direct material, your direct labor, and manufacturing overhead. So let's look at the preparation of your direct materials budget. So the direct material budget shows the quantity and cost of direct materials to be purchased. Okay, how much is the direct materials that we need to purchase? First, we decide the quantity and then we decide how much is the value or how much is the cost in ringgit and cent. So you start off with the unit to be produced. You already decided how many units that you want to produce. And then here you need to know how much that you need to produce. From how much that you need to produce, then it goes into how much is the input that you require to arrive at that production level. So that will be the starting point will be the unit to be produced, and then you plus with the direct material units per unit of production, okay, per unit of the unit produced. So you will get the direct materials units required for production, and then you need to adjust with the opening and closing inventory of your material now. Previously, we looked into the adjustment for the opening and closing inventory of your finished goods. Now we go into the material or the input. So here will be your direct materials, units required for production. You get from here, here brings to here, and then adjust for the opening and closing. So for the closing or ending, you add that one and then minus the beginning direct materials. So you will get the direct materials required to be purchased. Again, this one is in terms of the quantity. So from that quantity, okay, from that quantity, this one and this one, the same one, we take here, okay. From that quantity, now you times with the cost because you want to convert into the value. So times with the cost per direct materials units that you require. So you will arrive at the cost of direct materials purchased. Okay, to help you to understand this better, I will show you with an example. Okay, let's take for example here. Okay, your material budget. So your material budget, so let's say you have a product. So you need to be produced times with the consumption of material in one unit product. So for example, you are producing a shirt. So let's say you are producing a shirt, and let's say one t-shirt requires 2 meters of fabric. Okay, one t-shirt requires 2 meters of fabric. So if you are producing 2,000 t-shirts, that means 2,000 times 2 meters. So you will get 4,000 meters of fabric that you require. So how you arrive at this one, that will be the 2,000 units, that is the required production times with the consumption of material in one of the unit produced. This one, consumption of material in one unit produced. So you will get 4,000 meters. Now we are talking about the fabric, no longer about the t-shirt. If the t-shirt is your finished goods. Okay, we are talking about the material, that is the fabric or the cotton that you require. So we are talking about this one, and the quantity that you require now will be 4,000 meters. So that's how you arrive at that one. Next, if you want to know how much is the value, okay, so that will be the total material usage in terms of the quantity. Then you have to adjust for the opening and closing, same as before, but now we are talking about the material. We are not longer talking about the finished goods. We are talking here about the fabric. We are not talking about the units of t-shirt, but we are talking about the meters of the cotton of the fabric that you need to produce that t-shirt. So you have to adjust for the closing and the opening inventory. Concept, the same concept applies as before. That means you have to add the closing inventory and less your opening inventory. But we are talking about the materials now. Okay, and then you will arrive at the total material or quantity to be purchased. And then this one is still in terms of the quantity, and then you have to times with the cost of material. Cost, that means how much is the cost per meter in this case. And then, so you will arrive at the cost of materials to be purchased. So for example, we have already decided that just now the quantity that we require is 4,000 meters here, the 4,000 meters of fabric that we need. So 4,000 meters. So at the closing inventory, assuming that we have 350 of materials and we have the opening inventory of 200. So you will arrive at 4,150. That is the total material to be purchase or the meters of fabric that you need to purchase. How much is the cost per meter? If let's say the cost per meter is 5 ringgit per meter, then you will arrive at the cost of materials to be purchased as 4150 times 5, you will arrive at 20,750 ringgit. So that's how you prepare the material budget, right? Okay, I've already shown you how you arrive at all this formula just now. And then let's look at the preparation of your direct materials budget. Okay, so let's say each unit produced requires 2 kilogram of raw materials at a cost of 4 ringgit per kg. Okay, and then that is, for example, the t-shirt that you produce now require the fabric of 4 ringgit per kg. Okay, so Hayes maintains an ending inventory of raw materials equals to 10% of the next quarter's production requirements. So this one is how you calculate your ending inventory. So given in the question, how you maintain your ending inventory? 10% of the next quarter's production. Okay, 10% of the next quarter's production. And then for the quarter 4, your ending inventory is 1020. You are required to prepare the direct materials budget. How do you prepare the direct materials budget? As being mentioned just now, you are preparing based on the quarter by quarter in this case. Okay, so you already decided the units to be produced. How do you get these figures? 2,000, 3,001, 3,006, 4,001, and 4,006. Where does this figure come from? So it actually comes from your production budget. This one, the required production in units. So 3,100, 3,006, 4,001 and 4,006. So from there, that is your starting point when you prepare the direct materials budget. So it comes from your production budget just now, right? Sorry. So starting off with your units to be produced, and then you already being given the information that each unit requires 2 kilogram. So you will have direct materials per unit is 2 kilograms. So you times with 2 kilogram per unit. So you will arrive at 6,200 in this case for quarter 1. So that gives you the total kilograms that you need. Out of that, you need to adjust for your closing and opening inventory. So at your closing inventory, less your opening inventory. How do you calculate your closing inventory? So given in the question, the company maintains an ending inventory 10% of the next quarter's production. So that would be next quarter's production will be 7,200 times 10% of that. So 720. So the same goes here. How do you get 820? That will be 10% of 8200. The same goes here. 920 is 10% of 9200. And this one, where do you get 1020? Already given in the question. You can look at the question. The question mentioned that for quarter 4, your ending inventory is 1020. And then you adjust for your beginning inventory. How do you arrive at your beginning inventory? Remember, as what we have done previously, the closing stock of one period or closing inventory of one period is the opening inventory for the next. For example, closing stock here is the opening stock here. The closing stock here is the opening stock here. Closing stock here is the opening stock here. So you can work it out. So this one again here, and then you arrive at here. So you will get the beginning direct materials. Okay. So you will arrive at the direct material purchase. This one is in terms of the quantity. This one is in terms of kilogram. How many units that how many kilograms that you require for that particular material. And then you have to times with the price or cost per kilogram. This one already given in the question. The cost per kg is 4 ringgit. So you will arrive at 6300 times 4. So that will be your total cost of direct material purchase. To get for the year, you just add all this up and then you will arrive at the cost of direct materials purchased for the year. So that's how you prepare for your direct materials budget. Okay, you determine based on the quantity and then you times with the cost per kg. So again, remember you start off with your units to be produced. That is the production. You arrive at when you get all these figures from the production and then times with the required consumption per unit, and then you will arrive at the total kilogram or total amount of material that you need, and then adjust for the closing and the beginning inventory. Then you will arrive at how many or how much the direct materials required, and then times with the cost per unit or cost per kg. In this case, you will arrive at the value or the total cost of your material. So basically, that's how you prepare your direct materials budget. Okay, with that, I thank you.